2012 marked the beginning of strikes in South Africa's mining sector. You will very well remember what happened at Marikana, and we've just had a escalation thereafter. Saijil Singh is the lead analyst at Coface. It was interesting, yesterday we had Steve Perry in here from Royal Bafokeng Platinum. They were immune to the strikes. They've managed to continue production as normal and done very well. At the other end, you have Lonmin, who were not immune to the strike. Clearly, they were paralyzed by it. And you've got these two opposites. But for the country as a whole, what is the platinum strike, and what's all this unrest in mining meant to us?
Okay, well, if we look at just output in terms of the impact the strikes have had on the mines, you're looking at about 6% reduction in output, and reduction in production, I should say.
Only 6?
Yep, 6% in total, yeah.
So of total mining, though?
Yes, yes.
All right, so how much is platinum, though?
For platinum, it was quite significant. In terms of a rand value impact, we're looking at about 10 billion rand. So it was significant for the platinum producers in general, and that's Amplats and Lonmin. So in terms of wages to staff, you're looking at around 1 billion rand of lost revenue, and that impacts significantly throughout the economy.
So where do you get your numbers from? Because the Chamber of Mines have got very different figures on wages, etc.
It's very difficult to get an accurate figure. However, our analysis is done purely on the wages that would have been paid, and then we analyze what has not been paid, accumulate it, and then do a few adjustments using our various models.
So you've been pretty conservative in all of this, but if we have a look at the South African economy generally, and there's all indications that we aren't going to hit, certainly we're not going to hit 2%, maybe we'll be lucky to hit 1.5%. What are your numbers telling you now?
Our models are telling us around 1.1 to 1.2%. Very, very conservative. I think we probably might get to about 1.4, but definitely 1.5 is stretching it. And it's a strategy for being an emerging market and trying to compare with the other emerging markets, especially in Africa.
And Coface is a global organization. When you talk to your colleagues from other parts of the world, what do they think about the things that are happening?
Really different views, eh? In terms of Europe, the general Europe consensus is that this is just an anomaly. It will fly by, nothing major here. Let's focus on other markets short term. South Africa will bounce back. But we're finding opinions from other BRIC nations, our counterparts in Russia, China, India, where they are starting to feel that there's a lack of confidence in our economy, and that's what we're getting in terms of a sentiment from them, and that's what's frightening long term. You know, a short-term strike, yes, it affects us right now, but we'll bounce back. That's not too bad. But when you're getting foreign investors, and significant ones, that are losing confidence in our markets and are now looking to other markets like your Angolas and Mozambiques, it's terrifying for our long-term prospects, and that's where we are at the moment.
It's extraordinary insights, that, because clearly these are the people in those nations who engage with the governments and would be shaped in their opinions, no doubt. Let's just take the worst case scenario: South Africa gets kicked out of BRICS. What would it mean anything?
Really speaking, at the moment, it's not a financial benefit for us to be part of BRICS. It's more sentiment there. But foreign direct investment, and that sort of indicator tells us whether people want to invest long term in our economy. And if we don't have that sort of investment level, we are not going to be able to grow, and that leads to a number of socio-economic problems locally. So the country can escalate into a greater degree of poverty, if you want to call it.
But it's so interesting here. You said earlier that the Europeans are saying we'll bounce back. The Americans, we know there's the whole White House discussion going on at the moment. But the allies are the ones who are most cautious. Perhaps they know South Africa best.
Well, they know emerging markets, I would assume, a little bit better. The problem in Europe is that sentiment of bouncing back, because that's what they do. It's a very elastic market. Things go up, things go down. They're used to those sort of concepts. They more or less categorize South Africa in line with their type of economy, when it's not a reality. I know we're not a true African economy, but neither are we a European economy. We're very unique in that.
Very useful insights from Saijil Singh. He's with Coface, the lead analyst there for Coface South Africa.